analysts are estimating dollars in revenue. I think they stand a legitimate chance to. All right, everybody, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. We're here to talk about all things investing. Just to tell you a little bit about myself, I have a background in accounting. I started out as a CPA. I have not done that for years, but I have been looking at numbers for over 30 years and trading stocks for a long time as well. Just hoping to share a little bit of what I've learned over the years. We focus on Bitcoin and the Bitcoin miners. We also focus on the EV sector, and we focus on small cap, high growth stocks. So if you guys are interested in any of those, please subscribe to the channel. We're making a push for 5,000 subscribers. It would mean a lot to us. And if you like this video, please smash the like button. Okay, with all that out of the way, today I want to talk about RIOT Blockchain. RIOT is a Bitcoin mining company, stock ticker RIOT. Now, they came out with their third quarter results, and they were not received well by the marketplace. So RIOT took a fairly big dip on the day that they reported these earnings. So I want to go through these earnings and see what the reason was for that dip, if it was justified, where we think the stock is going from here. And so we're going to go through the Q3 results, and then we're going to take a look at the chart and talk stock price and see if we can make some sense out of this. All right, I'm going to scroll down to these bullet points because I think it's easier that way. Third quarter 2021 and recent financial highlights. Okay, so increased total revenue by 2,532% to a record $64.8 million for the 3 months ended September 30th, 2021. Compared to $2.5 million for the same 3-month period in 2020. So that is year-over-year revenue growth of over 2,000%. Okay, next line, increased mining revenue 2,099% to a record $53.6 million for the 3-month period ended September 30th, 2021, as compared to $2.4 million for the same 3-month period 2020. There's about an $11 million of additional revenue that was not mining revenue. So we will talk about what that is and how that affects the big picture. So next thing they say is they increased mining revenue margin to 76%. For the 3-month period ended September 30th, 2021, as compared to 47% for the same 3-month period last year. Now, that does not include depreciation and amortization, so we'll look at that when we look at the financial statements. Increased mining revenue margin by 6% on a sequential quarter-over-quarter basis to 76% for the third quarter as compared to 70% in the second quarter of 2021. So to me, that is much, much, much more relevant. Year-over-year numbers for these Bitcoin miners are not very meaningful because there was not much Bitcoin mining going on in 2020 as the price of Bitcoin was so low that a lot of these miners scaled back or stopped mining Bitcoin. But the quarter-over-quarter results are extremely relevant. Okay, increased Bitcoin production by 91% on a sequential quarter-over-quarter basis, with 1,292 Bitcoin mined in the third quarter of 2021, as compared to 675 Bitcoin mined in the second quarter of 2021. This is monstrous growth. 91% year over year would be an incredibly high growth company. They had a 91% increase quarter over quarter. So that is staggering. So that's very good news. Now, next line, produced a net loss of $15.3 million for the 3-month period ended September 30th, as compared to a net loss of $1.7 million for the same 3-month period in 2020. Net loss for the quarter was significantly impacted by non-cash stock-based compensation expense of $36 million. So we got to be careful looking at that. That does not look good. You know, they mention a few things, but really the main reason is $36 million in non-cash stock-based compensation to their employees. While that did not cost them any cash, they have to recognize that as an expense. The market reacts very poorly to this amount of stock-based compensation in a quarter when compared to revenue. So $36 million of compensation is quite a bit compared to their overall revenue of $64.8 million. Now, I'm not going to make a judgment on that. You guys can make a judgment for yourself. These things are fairly common, but it is also fairly common for the stock to take a short-term beatdown when the company does this. People tend to knee-jerk react to this in an extremely negative way. Let's just leave it at that. Substantially all the current assets as of September 30th, 2021 totaling 179 million, are highly liquid. Unaudited Bitcoin balance stood at 3,995 Bitcoin, so just short of 4,000 Bitcoin held on the balance sheet at September 30th. The average Bitcoin price used to calculate Riot's third quarter revenue was approximately $41,837. So when you look at that revenue, the mining revenue of $53 million, remember, they were using an average Bitcoin cost of $41,800 to calculate that revenue, and we know that subsequent to that, we've been hovering around $60,000 for the past several days. We did reach as high as $69,000, so most people watching this are probably reasonably bullish on Bitcoin and think that it's going to at least maintain its price, if not go higher. I just want to take a quick look. This is their 10Q that they reported to the SEC. So you'll see on the revenue side, the other $11 million was hosting revenue. And what I want to point out at the moment, if you look right here, the cost of revenue data center hosting was $12,581,000. So they've added a hosting component to what they do as a business. They just got their new massive operations set up to start doing this. So this was really the first quarter that they started hosting. And you will see right out of the box here, they're losing a little bit of money on this. So $64.8 million of total revenue is not what I am using to compare this across the mining companies. The $53,590,000 is what I am using to compare apples to apples as I look at this company versus the other Bitcoin mining companies. Now, I think they get some economies of scale out of this very large operation. So even though they're losing a little money on hosting, I would imagine that they have a business model whereby this is going to generate profit in the future versus a little bit of a loss, and help them scale up their own operations by being able to use economies of scale with this massive new facility. As we look at gross profit and all that other stuff, I like to look at just the cryptocurrency mining. The hosting is something we'll have to keep our eye on going forward to see if they can turn that into a profit center. That would just be bonus. Then you'll see selling and general administrative expenses of $40 million. That number has ballooned, but remember, $36 million of that was non-cash stock-based compensation. That leaves about $4 million as their actual selling, general, and administrative expenses. The other $36 million was a one-time event. So again, we're going to have to keep our eye on that. Is that a one-time event, or are they going to keep issuing massive amounts of stock to their employees over time? So we'll have to see how that plays out. Depreciation and amortization was $12 million. That's also really a direct cost. That's the cost of their machines that they recognize on a quarterly basis. So the main costs that Bitcoin mining companies have are the energy that they have to use and the money that they have to spend on the Bitcoin mining rigs. So those are the two components. Net loss of $15 million. That was largely due to the $36 million in stock compensation, which turned this from a profit to a loss. I want to talk about their 2021 at-the-market offering. This has been something that's been looming over their head for some time. They had a $600 million at-the-market shelf offering, so they gave us a complete update on that in this quarterly report. So for better or for worse, here's what they did. Subsequent to September 30th, in connection with the company's 2021 ATM offering, the company received gross proceeds of approximately $564.3 million from the sale of 18.7 million shares of common stock, which completed the 2021 at-the-market offering. So this $600 million offering is done. The vast majority of this, it would appear, that they did in October and early November. Through September 30th, they had issued 1,227,991 shares. They got about $35 million for that. Subsequent to that, so over the month and a half since then, they issued another 18,700,000 shares. So that's a total of approximately 20 million shares. This at-the-market offering diluted the shares by just under 21%. Obviously, the gross proceeds were $600 million because it was a $600 million at-the-market offering. So that means an average sales price of $30.11 per share of stock. Now, in my opinion, that is a little low, but if we look at their chart, you're going to see they hovered between $25 and $30 for months and months and months. 30 seemed to be the peak for a while, so I think eventually here they've decided to get the rest of their money at the $30 strike point. Subsequent to that, they're up in the 40s. The other thing is the market tends to punish open at the market offerings. So I think just by finishing this offering up and everybody knowing what it is over the coming months, that will be a positive thing. So if we take just a quick look at the chart, you'll see at the open on November 16th, they gapped down from top to bottom almost 17%. So that was on their earnings report. So from their recent high on November 15th, which was just 3 days ago, to today, they're down over 23%. So you can see we had a price target on this of $40, and that price target was reached. We then set a recent high of $46.19. We are now down to $35.27. So Bitcoin's been going sideways for a few days. The market's digesting this earnings report. There was some tough stuff in there, but their revenue from mining was actually the largest out of all the North American miners. So they diluted their stock through this $600 million offering by about 20%. So that's the bad news. The good news is they got $600 million for it. And the good news also is it's done and it's not a cloud hanging over their head anymore. So I think they also took a little hit for the massive stock compensation. So all these things put together, when I look at this company, it looks like a company that is super high growth. They're looking to still drastically increase their exahash mining capacity. They are currently at 2.8 exahash, and they're looking to get up over 8 exahash by the middle of next year, and I suspect they will continue to increase that number with some more purchases of mining because they have capacity to do more than that from a power standpoint. So last thing we'll look at, they are massively increasing revenue. They went from 12 million in 2020. They're estimating 225 million in this year, 2021. And next year, analysts are estimating about 468 million, about $500 million in revenue. I think they stand a legitimate chance to beat that. These are massive, massive growth numbers. The average analyst is estimating they're going to earn $1.79 a share. The highest analyst is estimating $2.81. Depending on the price of Bitcoin, I think they have a legit shot of hitting that or beating that. So a lot of this obviously depends on the health of Bitcoin. So that was an awful lot of stuff. Those are my thoughts on the Riot Q3 earnings report. Thank you so much for watching, and we will see you in the next video.